It can be a big decision picking whether to live in Maryland or Virginia, and one of the biggest factors to consider is how much it will cost you, specifically in taxes. Since taxes have such a big potential to greatly affect how much money you have in your pocket, let's do a head-to-head comparison between the two states. One quick disclaimer for all of the taxes that I cover is that I am not an accountant, nor do I have a goal to be one. So all of this information is general and based on publicly available information. Your outcomes could be very different than what I cover here. So with that in mind, let's continue. As a homeowner, property taxes are probably going to be one of the bigger taxes that you encounter. So how do they differ between Virginia and Maryland? To figure this out, I'm comparing property taxes between two Virginia counties, Arlington and Alexandria City, and two Maryland counties, Montgomery and Prince George's. Get ready for some math. Let's start by looking at Arlington County. Arlington County property taxes are billed in 2 installments per year that are due in June and October. The tax rate for Arlington County property taxes in 2024 was $1.033 per $100 of assessed value. There are tax relief options available, but for our example, I'm going to go off of the base rates to keep things simple. To allow for a more direct comparison between all of the areas that I cover, I'm going to calculate the property taxes of a theoretical house assessed at $800,000. In this case, Arlington County property taxes would be a total of $8,264 for the year, with $4,132 due in each increment. An extra fee that is charged on top of your property taxes is a stormwater utility fee. This is a fee that the county charges to help cover the cost of stormwater management by the county. It shows up in your property tax bill, but it's actually on top of your property taxes. All homes in the county are charged this fee, and the final amount depends on the home type and size, as well as the impervious area on your property. The impervious area is the space on the property that does not allow water to soak in when it rains or snows. The county does provide for credits that can be applied to reduce this fee, but again, to make this more simple, I'm not going to include them. Just know that they could reduce how much your fee ends up costing. There's a lot of variation in the amounts that are charged for this fee throughout the county, so to make the math a little easier, I'm going to use $500 for our calculations since it's close to the more common charges that I saw on the county's website. Altogether, when you combine the property taxes and the stormwater management fee, our example house comes in with a grand total of $8,764 owed per year, billed in installments of $4,382. Next up is Alexandria. Alexandria is similar to Arlington in that property taxes are billed in 2 installments, but here you'll pay them in June and November. The property tax rates in Alexandria for 2024 came out to $1.135 per $100 of assessed value. There is one special zone where there's an additional tax of 20 cents per $100 of assessed value, but we'll be using the lower dollar rate for our example since the special zone is a fairly small area and you're more likely to live outside of it than inside of it. Alexandria has property tax relief options available, and once again, I'm not going to consider them in our math. In this case, using our hypothetical $800,000 house, the property taxes in Alexandria City would come out to $9,080. As in Arlington, Alexandria also has a stormwater utility fee. Alexandria's fee calculations are also based on the property type and the impervious area on your property. After spending way too long clicking through their fee map, I'm going to say that we'll use a fee of $541 for our example. Once you add everything together, your property taxes plus your stormwater utility fee ends up with a total bill for the year of $9,621 that's billed in 2 payments of $4,810.50. Now, let's compare the Virginia County results to the Maryland counties. As I mentioned earlier, I've chosen to use Montgomery County and Prince George's County since they're some of the more popular counties to live in if you're choosing the Maryland side of the DC metro area. In Montgomery County, your tax rate is going to vary depending on which municipality you decide to live in. There are 23 municipalities in the county, and similar to the Virginia locations, they all do 2 payments per year, with payments due in September and December. The base of Montgomery County property taxes includes the flat rates of $0.1120 per $100 of assessed value from the state and 67 cents per $100 of assessed value from the county. From there, the local municipalities charge anywhere from nothing to $0.622 per $100 of assessed value. As you might guess, that results in a pretty wide variety for what you're going to pay. There are tax relief options available, but as with the Virginia counties, I'm only using base rates and not factoring in any potential savings. So, since we have such a wide range, what is the best way to represent the cost for Montgomery County? As much as I would love to give you just one single number to make for an easy comparison, I think in this case we may be better served by coming up with a range of potential amounts that you could pay. With that in mind, the rates that you could pay for property taxes in Montgomery County range anywhere from $1.1512 to $1.6614 per $100 of assessed value. That means that your property taxes for our example $800,000 house would range between $9,209.60 and $13,291.20. But we can't forget our stormwater utility fee. In Montgomery County, it's called a water quality protection charge, and it's effectively the same thing as the Virginia fees. It's calculated based on the type of property you have, as well as the impervious area on the property. There are credits available to reduce the number, but assuming that you don't have any, the charge will be between $45 and $410. Between property taxes and the water quality protection charge, our sample $800,000 house would cost between $9,254.60 and $13,701.20 per year, and would be billed in 2 increments of anywhere between $4,627.30 and $6,850.60. If you decide to look in Prince George's County, you get the option to pay your taxes one time per year, or if you meet certain criteria, you can break it up into 2 payments per year paid in September and December. As with Montgomery County, Prince George's County property taxes include components of state, county, and local taxes. Properties in Prince George's County are assigned a tax class by both the county and the town based on the property type, meaning that your tax rate will vary based on what class your property is assigned. The county tax rates range between $0.1120 and $1.486 per $100 of assessed value. Unfortunately, I was unable to find a description of which properties fit into which categories, so we're going to have to use our ranges again. Another thing that I'm not able to factor in here, due to the variation in the town tax rates, is that some properties, in addition to having a dollar per $100 of assessed value rate, have a flat amount that you pay on top. In this example that you see here, the flat rate is $175. That just adds even more variation that's going to, unfortunately, make it harder to do a direct comparison. But I will still do my best. In Prince George's County property taxes, there is a stormwater fee, but it's calculated in the rates, so it's not charged on top of everything else as it is with the other counties I've talked about. So let's do some math. For this example, for the $800,000 sample property that we've used before, I'm going to say for simplicity that it is not in a town. That means that we will only have the state and county tax rates to consider. As with Montgomery County, I'll be giving a range rather than a single number to give you an idea of what you could pay. Factoring everything up for a fictional $800,000 house gives you a range of between $896 and $11,888 for your property taxes. If you have 2 payments per year rather than 1, that would then be billed in increments of between $448 and $5,944. Keep in mind that those numbers are considering a property outside of a town, meaning that anything subject to a town tax would definitely be higher. Okay, so we have really gone down the rabbit hole here and done probably way more math than you were expecting. So what is the end result? It's hard to say precisely since the Maryland counties were ranges rather than single numbers. That said, if you go just based on the high end of the tax rates, I'd have to say that Virginia is a winner here, with the caveat that Maryland could be the winner if you are looking in certain areas with those lower tax rates. Next up, let's get into the income taxes for both Maryland and Virginia. And good news, it's going to be way less math. Income taxes are another big impact to your daily account balance since they directly impact how much you bring home in your paycheck. Income taxes for Virginia are calculated using a progressive tax system with 4 brackets and are capped at a rate of 5.75%. The first tax bracket covers any income from $0 up to $3,000. Regardless of how much you make, any income in this bracket is taxed at 2%. The second tax bracket covers income between $3,001 and $5,000. Again, regardless of how much you make, any income in this tax bracket is taxed at a 3% rate. The third tax bracket in Virginia covers income between $5,001 and $17,000. Income in this tax bracket is taxed at 5%. The final Virginia tax bracket covers any income over $17,001. In a real-world example, if you made $100,000, you would be paying 4 different tax rates for that income, with the majority of the taxes being at the 5.75% rate. Maryland, similar to Virginia, also has a progressive tax system with a max income tax rate of 5.75%. There are 2 main differences to consider with Maryland, the first of which is that the state income tax rates are spread between just a few more brackets, 8 brackets if we're being exact. This means that instead of pretty much automatically paying the highest rate in the state, there's actually a little more flexibility. Bracket 1 considers income between $0 and $1,000. This income is taxed at a 2% rate. Bracket 2 considers income between $1,001 and $2,000. This income is taxed at a 3% rate. Bracket 3 considers income between $2,001 and $3,000. This income is taxed at a 4% rate. Bracket 4 considers income between $3,001 and $100,000. This income is taxed at a 4.75% rate. Bracket 5 considers income between $100,001 and $125,000. This income is taxed at a 5% rate. Bracket 6 considers income between $125,001 and $150,000. This income is taxed at a 5.25% rate. Bracket 7 considers income between $150,001 and $250,000. This income is taxed at a 5.5% rate. Finally, Bracket 8 considers all income over $250,000. This is the highest bracket, and any income here is taxed at a 5.75% rate. As you can see, a person won't hit the highest tax bracket of 5.75% until you get to over $250,000 of taxable income. This gives a lot more variation in what you'll pay, in direct contrast to Virginia's tax brackets. If we were to do a direct comparison to the Virginia top tax bracket that starts at $17,001 and is set at 5.75%, if you were making that same $17,001 in Maryland, you would be paying a 4.75% tax rate. The second main difference between Maryland and Virginia, and probably the biggest 75% tax in Maryland, each county and even some cities have their own income taxes that are charged on top of the state income tax. As an example, both Montgomery and Prince George's counties levy a 3.2% income tax on county residents. This means that realistically, if you were in the top Maryland tax bracket of 5.75%, you would actually be paying a total rate of 8.95%. That's a pretty big jump. Now that we've dug into the tax rates just a little bit more between Maryland and Virginia, I think I have to give the win to Virginia. Even though you're pretty much paying the top tax bracket right off the get-go, those county taxes are pretty rough. Sales tax is one of those things that affects you pretty much every day, unless you happen to be really good at just not spending money, in which case I am totally here for that. At some point though, you will buy something that will be affected by sales tax, so let's touch on how much you might expect to pay depending on the state that you're in. In Virginia, there's a 5.3% state sales tax rate that is applied wherever you go. That should make it easy, but in actuality, different regions could have different sales tax rates, and Northern Virginia is one of those regions. In Alexandria and Arlington, you can expect to pay a 6% sales tax rate on pretty much everything. This is not on top of the 5.3% Virginia sales tax rate, but is used in place of. There are a couple of exceptions, and one of the biggest is for food and personal hygiene items. For items that fall into this category, you'll be looking at an only 1% sales tax rate. Keep in mind that food is a bit more complicated of a category than you might think. If you're buying prepared food that does not count as groceries, you can expect to pay a 4% sales tax rate rather than the 1% rate for items like groceries. This 4% rate also applies to alcoholic drinks. And if you're renting a car, you can expect to pay a 10% tax. If you're buying a car, you'll be looking at a 4.15% tax. There are a number of exemptions for what is and isn't charged sales tax, to include medical-related items and some services, among other things. I'm not going to get too into detail on these because there's such a variety, but you can definitely dig into the tax code if you'd like some more information. Similar to Northern Virginia, Maryland also has an across-the-board 6% sales tax rate. As with Virginia, there are some notable exceptions. Food in Maryland is not taxed, but food as a category is also pretty complicated. For food items to be considered exempt from the sales tax, they must be sold at a place that has over 10% of their sales going to grocery and market food that is to be consumed off the premises. In addition, the food category that's not taxed, as I just hinted at, cannot be prepared food to qualify for the 0% tax rate. In addition, any alcoholic drinks are taxed at 9% versus the 6% that you might expect. If you're renting a car in Maryland, you'd be looking at a tax rate of 11.5%. And unlike Virginia, Maryland sales tax rates for buying a car are the same as everything else, 6%. In terms of sales taxes, I think that Maryland might be the very slight winner. I say this because food is untaxed, and that's typically one of the things that you end up spending more of your money on. That makes it probably a little more important than perhaps the lower car sales taxes or car rental taxes that are found in Virginia. The last tax that I'm covering today is only applicable in Virginia. This tax is the personal property tax, which is also better known as the car tax. Virginia's personal property tax applies in all cities, counties, and towns in Virginia, so it's pretty much guaranteed that you'll pay it if you live in the state. The personal property tax is specifically focused on motor vehicles that are garaged here, and I do mean all motor vehicles, to include, but are not limited to, RVs, cars, trucks, buses, boats, even planes. All of them are subject to the personal property tax. There are some exemptions as to who is taxed, to include students, diplomats, or members of the military, but for the most part, every vehicle is subject to these taxes. The tax rate varies depending on which city, county, and town you're in, but in Northern Virginia, the tax rates generally range from about $4.50 to $5.50 per $100 of the vehicle's assessed value. In a lot of jurisdictions, there is some tax relief for personal vehicles up to a certain value, so the price tag isn't quite as bad as you might think. In both Arlington and Alexandria, the tax relief is factored in for the first $20,000 of a vehicle's value. Even with the tax relief, it's not cheap, and the bill that comes in during the year can be pretty hefty, especially if you have a more expensive car. The clear winner here is Maryland for the simple fact that they just don't have the personal property tax. All things considered, it's a really tough call between Maryland and Virginia. Based on just these comparisons, it's a draw. Both have benefits in terms of where you're going to pay less taxes, but they also have some drawbacks. So it really comes down to what most interests you. If you're curious about some other Virginia suburbs, check out this next video where I cover some of your options.